The following content is meant purely for educational and informational purposes and should not be relied upon as financial, investment, legal, tax, or any other professional advice. This is the Fundamentals Podcast, where we demystify crypto and help you navigate this ever-evolving internet-native economy. In this episode, we're joined by Jamie Coutts, Chief Crypto Analyst at Real Vision, a financial knowledge and education platform founded in 2014. Real Vision shares honest financial insights from the smartest industry experts, along with time-efficient market tools, an AI concierge, charting, note-taking, and access to a powerful community of like-minded investors and thinkers. With a rich background in traditional finance, trading, and technical analysis, Jamie provides insights into his career from Credit Suisse to Bloomberg Intelligence to his current research role at Real Vision. The discussion covers a wide range of topics, including the importance of macroeconomic factors, liquidity cycles, and the evolving institutional approach to digital assets. Jamie shares his views on Bitcoin's role as collateral, the current and future state of smart contract platforms, and potential impact of digital and decentralized assets on global finance. We also speak about the strategies to outperform during a bull cycle and how Jamie uses onchain data to assess fundamentals. Tune in for a great discussion on the fundamentals of crypto. Jamie, welcome to the Fundamentals Podcast. It's great to have you on.
Yeah, look, great to be here, Scary.
Before we hop into the details, everything I want to cover here, speak a bit about the macro environment, what you're focusing on at Real Vision. Could you give us a brief introduction to who is Jamie Coutts?
I'm based back in Sydney, but I spent about 20 years abroad. Started as with Credit Suisse First Boston in Australia as a private client advisor, primarily equities, but equity derivatives as well. And then I moved overseas, moved to London in the early 2000s, and did a couple of different things, but ended up on a trading desk for a sell-side firm, again in equities, covering Asian markets out of London. And then we set up shop in Singapore. So I moved out and started the operation there, and we grew that business. And I stayed in like the equities business really for the sort of the next decade. But I moved to the buy side. I worked at Tudor Capital Management as the execution trader for the Asian long-short equity books and equity derivatives. And then, beyond that, when those books were closed down and basically Tudor turned themselves into a family office again, I moved to Bloomberg as their senior equity specialist. And that role was interesting. It wasn't necessarily, considered a front office role, but essentially what I was doing was liaising with all the portfolio managers and analysts across Asia, primarily the sovereign wealth funds and the pensions and the large long onlys and some of the hedge funds, on how to really leverage the Bloomberg terminal and the analytics and the data for their workflows, but also, potentially like cross-sell some of the other systems that Bloomberg had at the time. So I sort of made this transition from sort of front office to sort of the tech side at Bloomberg, and then kind of went full circle and ended up back in crypto on the research side.
Yeah, that's cool. And that's actually where we first became familiar. And when I say we, I mean it's a token terminal and you, and working with our integration to the Bloomberg app portal, where you were a big helping hand. So maybe I just wanted to quickly ask about that, because that background for a lot of crypto folks is super interesting. You currently, I'd say, are one of the leading crypto analysts in the space, and you have like extensive experience in the equity and macro side of things from more the TradFi perspective as well. So having kind of built out the crypto research product of Bloomberg Intelligence, I was wondering if there are any like key takeaways from that experience that you'd want to share about how like a large institution such as Bloomberg is approaching the crypto market.
Yeah, well, I mean, that journey started like well before I moved across into Bloomberg Intelligence, because maybe a bit more of sort of a genesis story of like how I came into being crypto was that in 2016, 17, just personally, I was trading crypto, and I didn't really understand the opportunity or fully appreciate the attributes of assets like Bitcoin and Ethereum at the time. But because I had a very strong sort of grounding in technical analysis and applied disciplined technical analysis in most of the jobs I had performed over the last or the previous 15 years in the markets, including getting the CMT, the Chartered Market Technicians, and serving on the global board and driving business development for the CMT Association throughout Asia. I had become increasingly aware of the importance of digital assets. So when I was at Bloomberg in sort of 2018 and 19, really in the bear market, I put in the work, so to speak, and tried to really wrap my head around exactly what this space meant. And really what came out of that was that I just became a thorn in the side of product managers and sales teams at Bloomberg about, why we weren't looking at this space, developing product or developing some sort of business plan around it. I wrote a internal memo, internal report really, which was, it led me to the Bloomberg Intelligence role, but it was really just a market assessment of what digital assets meant to Bloomberg at the time. This was, I don't know, maybe 2019, 2020, when Bitcoin was maybe sort of $400 billion. And, my projections of where Bitcoin would be in sort of the next 2 years were exceeded. But even on very conservative assumptions, I was making the case that, the firm needed to start thinking about this as a new growth channel. And so that kind of what that ended up being was a role as leading the Asia Pacific business development for our crypto digital asset strategy. So really liaising between the clients and the product teams and the sales team to develop strategies of how to sell what we had at that time, which was extremely limited data, and trying to get the product teams to understand where this space was heading and what to build in the future, which was a really great role. And so that gave me a unique insight pretty early on to the whole world of crypto asset analysis from a data perspective. So I had just started to really notice, on-chain data at the time. And I mean, that sort of, when I moved into the Bloomberg Intelligence role, I brought with me a pretty strong understanding of who the major players were, and Token Terminal was right at the top of that list. And so that reaching out to you and reaching out to the firm to sort of build that relationship led to relationships there at Bloomberg, which is still withstanding, even though I've left Bloomberg Intelligence. But it was interesting. The insights that I sort of garnered from that experience was, number one, whether it's, firms like Bloomberg or other large, financial TradFi companies, as much as we think that they are sort of leading the bleeding edge, they're actually very complacent in their marketplace, in their sort of market positioning. So when you've got an asset class that's only worth a couple of $100 billion, but it's growing faster than everything else, it's still a blip on the radar. It's very hard to get internal resources marshaled to build products in an area which represents a very small part of the total revenue, or, almost no revenue at that time, although we were selling into the digital asset space because the Bloomberg Terminal was strong on its own, its own 2 feet for being, particularly strong in macro data and equity data and FX data, which was all very much needed for even digital asset players. But the idea that these companies, on a dime can make major strategic moves into different areas is, it's a little bit naive. So people in the digital asset space have always been frustrated at space, or at the speed at which some of these large institutions move. And, for me, it was incredibly enjoyable, as much as it was somewhat frustrating, working inside that organization, trying to move the needle when, senior management of a certain generation are steadfast against the whole concept, even though, middle tier management are making decisions to sort of grow that business. And that was a very interesting sort of internal conflict and dichotomy that I was exposed to. But, I think it's all moving in the right direction. And, we've seen now that the large customers of these firms, when they start making moves, people start listening, and so whether we're talking here about BlackRock or Franklin Templeton, when those sorts of companies are starting to ask or starting to make moves, then the ripple effect is very profound. It's just that even still, you might be surprised at the speed or the pace of change.
Yeah, I hear you 100%. I can feel that frustration as well, especially because we have the very institutional focus here at Token Terminal. So, I mean, we live that on a daily basis, but you just need to think long term. And I think that in crypto, everyone's just like pushing the term institutional adoption. We're seeing institutional adoption. I think you kind of need to split that into 2 parts. You have capital flows into the asset class coming in from institutions, but then you have the other part, which is the strategic decisions to actually internally prioritize building and allocating resources to doing stuff on chain. And that will take a lot longer. I think there's also a lot of innovators dilemma at the management level there. So you just got to do your best to educate these folks on getting them to understand the value prop and just slowly have their customers start asking more questions. And that's where you get to it. And maybe next then I want to ask about Real Vision, because that's where you ended up after Bloomberg. And it's funny because when I first got into crypto, it was about 2017, 2018. Real Vision was one of the first brands that I kind of hit my radar. It was one of the first places I started consuming content through. I remember Raul's face pretty clearly. Back then, I'm like, what is this all about? And I just remember him pushing the narrative. I'm like, okay, this is cool. I got to start learning more. And now you've ended up at that company, which is really cool to see. So could you maybe quickly speak about how your paths converged and what your role is within the company now?
Well, I mean, I was an early subscriber to Real Vision. When I say early, like when the entire platform launched. So that was, I think, 2010. So I've long been a subscriber to the platform, and, working at Bloomberg, and no offense, I mean, it's essentially Bloomberg TV and Bloomberg Financial News is the equivalent of like fast food for finance, right? It's a bit of a sugar hit. It doesn't really go in depth. It doesn't have the kind of breadth or depth that you really need if that's what you're looking for. And Real Vision came to market with a very strong product. And of course, that's been emulated by, other financial content platforms out there. But really, Real Vision's strength was the fact that Raoul had an extremely strong research product behind him before he went into financial content and digital finance. And that became the backbone of really Real Vision. And it has educated to experienced folks alike along that sort of decade-long journey. And I personally owed a lot to Raoul for some of the concepts that he brought to light in those years, and it became very much embedded in the framework that I developed personally. So I had a lot of respect for Raoul. And then, I don't know how or why, but about 6 months into the role at Bloomberg Intelligence, he was reaching out to me because he was quite interested in some of the concepts that I was coming up with around Metcalfe's law and the way to sort of value these blockchains, these networks. He had done a lot of work in this space, and we started talking about a lot of the ideas that both of us were coming up with. And we talked, of course, a lot about liquidity, and his framework has been extremely helpful. And I developed my own sort of set of liquidity indicators, and he took it to the next level with the everything code, which is he and Julian's work, which I think is just, an amazing analysis of how liquidity ties into asset prices. So that was really an interesting collaboration, and we became sort of, associates through there. And there was potentially an opportunity for me to move earlier. But it all worked out in the end, and we decided that the best sort of way for me to sort of work with Raoul was on the Real Vision platform. They didn't have in-house crypto research, and so I came on board to basically develop that product.
That's awesome. I think that is a great match, and it's amazing to see you two both create content together on the written side, but then also on the audiovisual side, listening to some podcasts and talks that you've been doing. So I feel like there's some proper complementary skill sets and value there for you to be working together. Let's move on to speak about macro then. You alluded to liquidity cycle and how everything plays into that. I want to start at a bit of a more focused level, especially as it relates to like the US, because there's a lot of uncertainty related to the US right now in terms of macro, and at least a bit of confusion. You recently tweeted that the dollar is everything to the Bitcoin cycle. I was wondering if you could slightly elaborate a bit more on what you mean by that, what you're tracking in terms of the strength of the dollar.
Yeah, so what I meant by that is like the US dollar is like the release valve for policy moves, and at the sort of the fiscal and also the monetary level. So, I mean, in the framework that I use, there are several factors or, metrics that I track that actually backtest very well against the Bitcoin price, and therefore the larger crypto asset class. The dollar is just one of those. Everyone's got, the topic of the day at the moment is like liquidity, right? Global liquidity, and everyone's got their own version of it. But I'm not sure how many people have like actually really statistically looked at how correlated they are or how important they are. Now, correlation doesn't always mean causation, but like just from a first principles standpoint, increases in liquidity do drive, I think, asset prices. I think you can argue that causation. And so when it comes to which metrics are statistically the most significant, the dollar is actually, one of the best, and it's better than, some of the other metrics like looking at global M2 or global money supply or the central bank balance sheets, because the dollar is far more reactive, right? It's it trades like 6 days a week, and you can basically deliver the market sensitive information that it needs to in the price sometimes before you're starting to see major shifts in like credit expansion or central bank policy. So it's used as one input in a framework, but it's really helpful when the dollar's weak or it's breaking certain support levels, or the momentum is very negative on the dollar. That is usually supportive of all, most assets, risk assets. But obviously you've got this fantastic asset class in crypto, which moves at a 3x volatility of everything else. So you get sort of those large magnified moves in crypto when the dollar is doing something significant. And it's been, sort of tracing out this very tight coiling price action really for 5 or 6 months. But it's, and it's still there. It's been weak, a little bit weaker over the last sort of month. But it's, if it breaks on my sort of analysis, looking at cycles, you look at the sort of major support levels, a break of 101, which is still a long way away from. So, but a break of 101 would be sort of cascading break in the dollar that usually provides jet fuel for risk asset moves and crypto cycles. And that's the sort of level that, traditionally, if you look at the major magnified moves in the Bitcoin price and the crypto prices, it's when it's broken major support level. And that's the level that I've been talking about on Twitter, I think recently, and maybe is the tweet that you're referring to.
Yeah, that makes a lot of sense. And as liquidity is kind of the thing that everyone is focusing on and a core driver behind Bitcoin market cycles as well, where do you currently believe we are in the liquidity cycle, and what kind of data points are supporting that thesis?
Well, Raoul and Julian have done an immense amount of work on this, looking at how the liquidity cycle is just an expression of really the debt refinancing cycle from sovereigns. So that is typically a 3 to 5 year phenomenon, because that's usually is usually like the midpoint of where they issue most of their debt. And that sort of has, it has coincided with the Bitcoin cycle. It actually just dovetails into the election cycle. So it's all this confluence of different cycles, but essentially it's really central banks and governments working together to ensure that they can refinance the debt that they've taken out in the last cycle, and basically continue to borrow because they can't grow their way out of the current dilemma that they're in. So based on, those cycles, being what they are now and into the future, we're sort of really at the midpoint where we start to see actual expressions of central bank liquidity expansion. We're still in contraction mode, like with central banks will actually, let me correct that, because the PBOC has just started to inject in the last sort of couple of days or the last week. So that completely changes the game, but the Fed is still tightening, although at a much less rate, because it's cut the amount of QT. When you've got it's really the rate of change that matters here. So the markets were able to bottom at the Q4 of 2022, not because there was liquidity expansion, but simply because the liquidity contraction slowed. So the markets price in 12 to 18 months in the future. And really at the start of 22, markets cracked big time. I can think of an expression here, but in case there's kids watching, I won't say it. But we saw, the most aggressive part of the bear market happen before rates were starting to be hiked, and before even the central banks had taken liquidity out. And so why did the markets actually bottom and start to rally in Q4 of 2022 and continue all the way in 2023? It was because the tight monetary policy was decelerating, right? The contraction was becoming less severe. And that was just basically taking the foot off the throat of the markets, because they knew what followed next was liquidity expansion, because they had tightened to the point where, any further tightening was going to be excessive and potentially risk global recession or a contraction in collateral, a contraction in growth to the point where the collateral would be under pressure. And the one thing that central banks cannot afford to do is allow the collateral itself to default, because then it's like ground zero. So it's just a matter of playing the game of like when central banks will have to go back to what they previously did or do throughout every cycle, which was add more liquidity in, because there is not enough growth. There is not enough organic growth to make up for the amount of interest payments that are now coming due on all the debt that's been issued for decades and decades. So the short answer to that is we're around the midpoint of the cycle where things typically get crazy. I've probably heard what Raoul talks about. He names it a piece of fruit, this particular time in the market. But it's generally, it is where you start to see prices start to move higher considerably.
That's super interesting. So I guess it's fair to say that you have quite a bullish outlook in the near future. And I just saw you also kind of updated your market price structure analysis as well, which turned from bearish to quite bullish. So I think things are looking pretty good right now in general. And maybe if we zoom out a little bit at a high level, outside of what you just talked about, what would you say are the major macro tailwinds kind of driving crypto adoption right now that could even put more fuel into the fire that the liquidity cycle is already kind of putting?
Yeah, so macro is in like the big secular type trends that are sort of underpinning everything, apart from the sort of secular structural trend of just, a debt spiral that we're in and therefore continual liquidity expansion. It's just this ongoing move towards digitalization and, increasing technology adoption. Bitcoin obviously came about to solve a particular problem, which was technology as well as monetary in nature, right? Because even before the 2008 crisis, Satoshi or whoever that was, or they were, saw a need for a money that was censorship resistant, decentralized, open, and so forth. So that, I guess, that technological solution to a monetary problem was just a confluence of needs. And of course, it has reached obvious product market fit. And so that is on its trajectory. From that, we saw the genesis of new ways to think about ordering society through open, transparent ledgers and smart contracts. And so that's a slightly different track where these assets are not necessarily, like Bitcoin, a monetary debasement hedge, but they are a play on technological adoption. And the numbers, show this. Like I talk about it a lot in terms of adoption. If you're tracking these through the on-chain metrics that Token Terminal have sort of mastered and become like one of the strongest companies in the marketplace delivery. So you've got just that secular trend. And obviously there's a generational aspect. There's a cohort or a generation where all the assets are pretty much tied up, $90 trillion that are going to be transitioning down to the Gen Xers and the younger generations who are much more comfortable with digital wallets, online transactions, and doing things in a more peer-to-peer fashion. So if you're betting against that, it seems illogical to me. So that really just underpins everything. And the fact that there is, this massive liquidity expansion at the same time just sort of supercharges that trend or reinforces it.
Yeah, definitely. The digitalization of everything. And I feel that pretty much ties into the fact that the digitalization of collateral as well, which is the bulk of a lot of value in the world. That has been different types of assets. Now you have a digital version of it, which is Bitcoin, and a narrative that slowly people are starting to understand, but it still requires a bit of spelling out for a lot as to why, for example, Bitcoin's a better form of collateral than existing ones. And I have kind of a two-parted question on that if we focus a little bit on Bitcoin, because you do have some great analysis on that, and I think you speak of it from a perspective that is easy to understand for also non-crypto native audiences, because you can tie it into general macro and kind of TradFi lens of viewing things. So you put out a report called Bitcoin's Collateralization Mission. Could you provide maybe an overview of this recent report's key takeaways? And then the second part of the question is that if you can, in the name of educating people in general, just spell out why Bitcoin really is a more better form of collateral than what we already have out there.
So the premise of that report was that it may take several years for Bitcoin to be held on the balance sheets of nation states and also central banks. And I wrote that report in April. And the quickening that we're seeing, in terms of geopolitics and that whole nation state debate has taken everyone by surprise, including me, who, had, faces of surprise and shock and disdain when I was mentioning it 2 years ago that nation states would definitely adopt Bitcoin, primarily because of the energy attributes of proof of work, which was heresy to even talk about because it was supposed to be boiling the oceans and all this garbage. But, we've started to see, whether Trump actually believes this. I suspect he's been told and he's trying to win votes. But the fact that it's elevated to that level already is remarkable. But the point of the report was like, okay, even if let's say this does take several years to take place, in the interim, what I'm starting to see in terms of Bitcoin's use as collateral just within the crypto economy could actually be a meaningful intermediate step. So that report sort of focused on one protocol. I didn't want it to be like a selling point for that particular protocol, but more just to sort of paint the obvious need for Bitcoin as collateral inside the crypto economy as a staked asset on other proof of stake chains, right, that have weaker security. So, if you just look at the daily active users, 85% of them are happening other than in other blockchains, right? So you can argue all day whether meme coins and speculation is a legitimate use of blockchains. the point is that they are generating fees and they're underwriting the technology. And that growth is not diminishing, even though we've just been through a horrific bear market and also where interest rates have gone from 0 to 5%. That's not going away. The use case and the legitimacy of the technology is only improving, but some blockchains don't have the kind of security that they would want ideally. Bitcoin can be, through certain layer 2 solutions now, essentially be staked on the Bitcoin mainnet and act as security or staked asset for other proof of stake blockchains. And I thought that was just an interesting concept to sort of take Bitcoin into a new direction, or sort of a intermediate step on its way to becoming a global reserve asset in the sort of fiat world. So that was kind of like the point of it. And obviously with Bitcoin, the amount of economic security that it has is a function of the value that's there, but really you could say that's down to the fact that it's a proof of work blockchain and it's the original one. Because I think that proof of work is it doesn't need to be applied in every single network or most networks. Proof of stake, has its drawbacks, but I think if you're going to talk about a global money, proof of work is, and network backed by energy is, I think, the most robust way to go about it. And so that economic security can be leveraged by other proof of stake blockchains, thereby fortifying the whole crypto economy with Bitcoin at its core. And as institutions start to build on top of Ethereum and build on Solana and all these other proof of stake blockchains, if they're leveraging, if the validators are leveraging Bitcoin as well as the native token, I think that just fortifies the whole structure. And to do it in a way where Bitcoin essentially doesn't have to leave the mainnet, can stay on the Bitcoin blockchain, but act as security is a novel idea and a vast improvement in the other forms of liquidity management or yield products that have come before, which have been disastrous, right? Let's not mention the names, but so this kind of approach is not without risk. You're still subject to protocol risk and counterparty risk, but it's, I believe, less of a risk than the fully centralized yield-bearing products that we've seen before. And the fact is that there's $1.5 trillion in market value, even if most Bitcoiners don't want to do anything with their Bitcoin because it's their pristine collateral that is too valuable for them to risk in any kind of a secondary yield-bearing protocol. There's definitely going to be a percentage that will. And that is unlocking a huge amount of liquidity that can basically just, fortify the whole ecosystem.
So basically, is it fair to summarize that in a way that is kind of your thesis and the vision for how Bitcoin becomes the true reserve currency of the digital asset economy in that way?
Yeah, I think, you've got the fiat world and you've got the digital asset world. And actually the time between Bitcoin becoming a reserve asset in both of those universes or ecosystem maybe has narrowed dramatically with recent events, but I think it makes sense. It's a digitally native asset. It's got proof of work. Now restaking is becoming a legitimate subsector within the entire space, and Bitcoin is tapped for that security and makes its whole ecosystem stronger.
Yeah. And how about then from a nation state's perspective? I think that's super interesting because from the current digital asset economy, you understand it, of course, everything operates on blockchain rails, and once you kind of walk through what you laid out there, it makes sense for Bitcoin to be kind of the asset that provides the security. How does that then tie more into these fiat-driven nation states? What is the role of Bitcoin on the balance sheet of, say, the United States, if that were to ever happen? How do you see them thinking about it? 'Cause it feels like it might be slightly out of place in a way. It's a completely separate asset. It doesn't tie into existing infrastructure.
Yeah, at this point in time, like a bit of an odd duck, let's face it. Like really with the US, go and stick Bitcoin as a reserve asset. I think at the moment, even though there's a lot of talk, I think we're still a reasonable amount of time away from that actually happening. But if you think about it from the perspective of a mid-tier country in terms of size, an emerging market or emerging country, or a energy-rich country, they have a different set of priorities and a different electorate and a different set of goals. So in the case of El Salvador, before it realized there was perhaps untapped energy in the form of, volcano and steam energy there, what they were looking for was a hedge against just the US dollar because that was their legal tender, that was their national currency. And so they had no control over monetary policy, or they were a wing of the Fed and the US government fiscal policy. So in order to start to obtain some independence, that provided an opportunity or an alternative. Not easy to do in a global monetary order, a global financial order, where that kind of thinking usually gets, to put it lightly, there's a really interesting coincidental sort of track record of leaders who try to go down this path, not making it through to see their later years in life or countries being dismantled on the back of it. So, but we've started to see that there are countries starting to become very interested in it just from that perspective. But once you add the energy aspect into it, it becomes extremely compelling. So let's just take a couple of countries, for example. United Arab Emirates, Bahrain have overbuilt their grids. They have excess energy. And so they are looking to, as a country, monetize that excess energy, which is great for their citizens because not only are the citizens being able to generate, or is the government able to subsidize the energy costs for the citizens by keeping energy low, they're increasing capital investment, industrialization, digitalization, innovation. And so I don't think it's a far stretch to think that if you've got a country like United Arab Emirates, where they've got a local mining company that is sort of state-sponsored by the sovereign wealth fund or the pension fund in that country, investing into the mining operations, that native Bitcoin that have been mined inside that operation ends up, being held by that country as a hedge long-term because they also are growing. They are, part of the BRICS bloc. And everyone in that sphere of the world is looking at non-US dollar hedges and new arrangements for securing their wealth and doing trade. Bitcoin is a completely neutral currency. So as much as you hear the headlines talk about, commodity contracts being settled in rupee or even rubles, you can't tell me that they necessarily trust those counterparties wholeheartedly. It's more of a sign that, that they're putting their toe in to try and, break away and do so to show that the initiative has legs and that they, as a voice, they have more bargaining power. But I'm sure that they understand that actually the most credible monetary unit or a unit of account or monetary asset should be Bitcoin. So that was my thesis for really the past 12 months. And it was kind of confirmed by the Marathon CEO in an interview done about 2 months ago, where he confirmed there are several nation states that have got it on their balance sheet. They're just not talking about it. So when we'll hear announcements of this actually, taking place or them being a lot more upfront about it, we'll have to wait and see. But it's already happening.
I think that is just super fascinating to hear. Thank you for sharing that context, because it also just speaks to the fact of how multidimensional Bitcoin is as an asset in a way. It has a very clear value prop in the crypto native economy, but also from a different perspective in this fiat economy with no crypto rails yet, where you can think of it as an incredibly valuable asset to be holding in one way or another. So that's super cool. If we move on to speak a little bit about investment strategies here, another thing that you've been writing about is we've kind of concluded that we're somewhere in the middle of a bull cycle, which is always fun to be in. There's a bit higher energy in the crypto space right now. So you've written about the strategies to outperform during a bull market cycle. Could you walk through those?
Yeah, look, I'll talk you through what I've been talking with the RV community about. But you have to you have to approach this topic with a fair bit of humbleness, right? Because let's face it, 85% of managers can't beat their benchmarks, right? So they're paid to, but they don't. And that's just statistically proven. So when you've got an asset class that is giving you outsized returns at a superior Sharpe ratio, probably the best idea is not to get cute with it and get exposure to the top assets with a portfolio of, a smaller position around some of the more speculative things. Size those positions in such a way that you've got, fairly low risk. There is such a thing. But everyone even I say that I should stop saying in quotes when I talk about low risk. The definition of risk adjusted returns, Sharpe ratio, Sortino ratio, year on year out is superior in the crypto asset class, Bitcoin and Ethereum primarily, but that tails off considerably once you start going down the list. So that's what I talk about with, when I'm saying exposed to the largest assets. But, for opportunities, the way I sort of think about it is that firstly, I came from a technical analysis sort of momentum trading background. So if you just sort of divide everything by the leading asset, usually Bitcoin is typically the benchmark that everyone uses. But, this cycle, Solana has been the outperformer. So if you're looking at making an allocation or, you're looking at shifting assets in your portfolio, I think it's always handy to use relative momentum as sort of as the benchmark. So pick the benchmark that you want to use, Ethereum, Bitcoin, or Solana. Use the ratio chart. If it's in a clear uptrend, then that's obviously a very reassuring sign. So that's one way to sort of think about it and make sure you've got exposure to the assets that are outperforming the benchmark. The other way to sort of think about it is make sure that, over the long term, if your time horizon is, a decade and not necessarily a cycle long, like we're talking about here, because most people are always asking questions like, when should I get out? How do I make the most money in the next 12 months? Because that's what the liquidity cycle's like, where the sweet spot is. So that's much more difficult. But if it is a decade-long strategy and you've got a position size which is you're comfortable with, then actually, and this was hard for me to even get my head around, was actually you've got to buy in the downdrafts. You've got to buy in the liquidity bear market, because that's where you get the real outsized returns, or you just DCA it throughout the whole thing, and then you wake up in 10 years' time and hopefully you've done okay. So that's kind of how I think about it.
Yeah, that makes a lot of sense. I mean, there's no direct answer to what the assets you need to pick are to outperform, but I completely agree with you. And time in the markets beats time in the markets. That's the classic one. If we think about the assets outside of, or maybe not even outside of just the majors, what assets are you currently eyeing, or what seem most interesting to you? I noticed you speak a lot about the crypto, like smart contract market sectors, and then just focus on the fundamentals of different emerging ecosystems as well. So what is most interesting to you right now?
So I did an exercise just recently, and there's a company called Bitformance, so people should check out, because they're building, I worked with them on building out crypto sectors and subsectors. So firstly, I had to understand the market structure by looking at, in the same way as anyone who's from traditional finance sides, we look at the sectors and subsectors, look at where the performance is, and track this, first and foremost. When you look at where value is accrued so far in crypto markets, even though the number of tokens explodes, but if you just look at a rolling top 200, there's Bitcoin, and then there's the smart contract platforms, and they kind of make up around, I think it's 95% of the market cap. And so if there's 5 sectors in my framework, right? So digital currency, smart contract platforms, applications, infrastructure, and DeFi are the other remaining 3. They make up 5%. So there are a great, there's opportunities in those sectors, definitely, where I've just decided to sort of focus my effort, because I'm trying to scale my research business the most efficient way possible, is look at smart contract platforms in Bitcoin, because that's where, most of the value is accruing to the state. And obviously, if this whole asset class is to get to where we think it will, Ascari, then the application layer, the infrastructure layer, and DeFi will have to grow and may even outpace smart contract platforms in due course. It's just that at the moment, it's difficult for them to do that. Product market fit for a lot of it is still emerging or still nascent. So the value is definitely accruing into the smart contract platforms. But from there, you've got to be, selective in what you buy. The way I think about it is I've just transported over my thinking, because I wasn't a fundamental research analyst coming into this role. I was actually a momentum technical analyst, trading system sort of investor. So I'd built my own momentum systems, and I'd worked on, with financial institutions, factor investing techniques, and, portfolio management strategies and whatnot. So the concept of momentum in the crypto sphere doesn't just apply to price, it applies to also fundamentals. So I put a lot of screens and filtering through the universe of smart contract blockchain to look at which ones are growing the fastest, and then tie that back to the value or some sort of value ratio. So which ones are growing fastest and which ones are undervalued based on the number of daily active users, the fees, the TVL, all these other different metrics relative to their fully diluted market cap. And that way you're incorporating also the supply aspect, which is really problematic because these are inflationary assets, highly inflationary in a lot of cases. So by bringing all that together, then you can get a pretty good synopsis of which coins are creating network effects and are reasonably cheap based on the market cap and the supply that's still to come. So when you look at that, there's a way to sort of filter down the number of assets in the space. And I've been, I came on board to Real Vision, and Solana was like Raul's number one pick, and he had absolutely nailed it in 2022. We bought it. So the first bit of analysis was not to jump on the Solana bandwagon. It was like to look at, okay, is Solana's price justified based on fundamentals? So a lot of what I just talked about sort of ran me, that framework provided a basis to say, look, I think actually Solana is going to go a lot higher because based on that network adoption model, it can eat a lot more into the total market share of the entire space, but namely Ethereum. And then what else comes after that that's interesting? And I wrote a report on NEAR. That's also an incredibly interesting network because it's going in a very different direction to a lot of the other blockchains, but it's really that network effect or that network adoption at a fairly low market cap, which interests me.
That is really interesting. And I think something that people listening here might have picked up is the fact that you say you've been a technical analysis, momentum-based trader, whereas we at Token Terminal, we're pretty far from that in a way. We just purely fundamentals focused on-chain data. And it's been great to see that you become a power user of our platform, and the way you build these kind of almost composite metrics to analyze the momentum based on fundamentals also really pushes us to keep introducing new metrics and kind of think of different ways to showcase these fundamentals on chain. So you've definitely been a big help in our product development as well with that perspective. In terms of leveraging on-chain data in more detail, I just wanted to ask a quick follow-up, kind of walk through the core metrics that are important, that showcase the fundamentals of these smart contract platforms. But outside of what's available for you today, what are the biggest pain points in terms of accessing data? So what type of on-chain data is currently in highest demand for you and hardest to get?
Well, I mean, it's fairly narrow in terms of what you can extract. I mean, in many ways, you could come up with lots and lots of new metrics, but like on a first principles basis, like I'm quite satisfied with just the core metrics at this point. I think the challenges as an analyst or a strategist or an investor in the space is then take those metrics and create second derivatives of them that have some sort of statistical significance. And so that should be the job of the research analyst or investor. Although, by all means, I look forward to all the great work you've done. I mean, the research and the analysis that Token Terminal has done already is groundbreaking. And I'm sure that's something that you're already looking into by the sounds of it. But like for investors out there, whether you're working at a hedge fund or a prop desk or wherever, the sort of secret sauce is basically taking those metrics and customizing them yourself to create new ways of looking at markets that actually have some signal. So that's one thing. I think in terms of just data, which I'd love to see more of, it's really staking data. I think there's value there. I haven't mined it. Like I haven't, regressed it or backtested it, but that's sort of like the next frontier, and that'll be sort of just brought into the framework if there is signal in it. So yeah, I mean, that's kind of where my head's at in terms of the whole on-chain data space.
Yeah, I think that's spot on. And you're doing an incredible job at combining those basic on-chain metrics with more in-depth analysis and other indicators. So that is great to follow. Just wrapping up here then, I was wondering if there's anything you want to share on what's next for Real Vision, any upcoming interesting pieces that our viewers and users should be keeping an eye out for, or just on the personal side of things, anything you're super interested in the mid to long term?
Yeah, I'll share like what the grand plan is with Real Vision research is that there are reports that come out for the pro crypto tier, which every couple of weeks, and they cover a couple of different sort of areas. They're pretty broad. They cover the fundamentals and they cover the technicals. So what I've done with the index subsector and sector data is be able to pass out crypto breadth indicators as well. So this is a far afield from like fundamentals here. Oscar is saying, you'll have to excuse me, but like, at a very high level, you have to understand like what's the market structure of the asset class at any one point in time. Is Bitcoin leading and everything else is like tanking, which was really what we saw over the April to, just a couple of weeks ago. Market breadth diverged dramatically. And that's the sort of data that I bring. Well, that's my analysis I bring from equities into crypto to really bring breadth data into the equation, looking at any one point in time, like which sectors actually have leadership or the strongest leadership within their group, versus other groups. And that can help identify emerging narratives, but, also emerging fundamentals that follow. So that data is there, and there's some really interesting indicators that look at the difference between large caps and small caps, which was allowed me to come up with a pretty bullish report about 4 weeks ago. We got an extreme reading in small caps underperforming large caps, which on every single time that we've seen the indicator reach those sort of washed out bearish sentiment readings, we got a pretty significant rebound. And when that happens right at the start of the next liquidity cycle, which was basically what happened after DeFi summer in 2020, we had a good tanking in alts. And then the next thing you know, they rallied extremely hard. So that sort of informed my framework there. And there's basically dashboards now, which are going to be released to the Real Vision community that they can access as part of that subscription. And then also the fundamental data and Token Terminal is, I couldn't do it without Token Terminal to release dashboards to the community that will give them the ability to understand some of those metrics I just talked about. So it'll be an experience where you'll be getting a written research, the videos from Raoul, the videos from me, but you also have data at your fingertips as well. So it's pretty exciting, in-depth reports. We've done Solana and NIA. There's going to be other ones coming out in the next couple of weeks. And then I think the next frontier is really the area that I'm probably most excited about is the infrastructure sector, namely what's happening in storage, compute, AI, deep in. The data isn't as strong there. So it's something that I'd like to talk to you about off camera in terms of like what the direction is for Token Terminal. Because it's hard for someone like me to write research where I don't have data other than like just price, which I could do. But essentially the edge is like trying to combine those fundamentals and the pricing data together. But I think just looking at the AI space and the total addressable market and the need for decentralized AI should see some of these protocols, some of these applications do extremely well over the next sort of 5 to 10 years. So that's the next frontier, at least from my research.
Super interesting. And I will make sure to add all of the relevant links and information in the show notes for anyone who wants to dive in deeper. And in terms of data coverage, the topics and verticals that you mentioned, there are all ones where we need to put more emphasis on increasing the breadth of the data available. So let's speak about that off camera and make sure that we get you all the raw data that you need to keep putting out that incredible work that you do at Real Vision now. So thank you so much, Jamie, for this overview of your view of macro, what's going on at Real Vision, and all the insights you shared today. Really appreciate your time.
Hey, this is Gary. Thanks for having me on. And I'd like to say, how grateful I am for all the work that Token Terminal's done. Nothing can get done unless that data layer had been built. So, I look forward to all the great stuff that you're going to release in the future.
Thank you. Appreciate it.